this very timely debate on the Liaison Committee's follow-up report on financial exclusion. Perhaps I should explain the use of the word timely. I'm not referring to the fact it's now over a year since the publication of that report and 11 months since the government response, rather to the extreme salience of financial inclusion and exclusion, given the unprecedented cost of living crisis which is affecting so many people so acutely. Firstly, I declare my interest in the register, particularly as a member of the Financial Inclusion Commission and as President of the Money Advice Trust. Turning briefly to the history of the report, I reflect that it has had a long gestation period. The original Select Committee, which I had the honour to chair, reported in March 2017 with 22 wide-ranging recommendations calling on the government, the Financial Conduct Authority and the banks to give much greater priority to tackling financial exclusion and ensuring that vulnerable customers were getting a fairer deal. When we debated the report alongside the government response in December 2017, I well recall expressing my disappointment with what I felt was a somewhat lacklustre and dispiriting response, particularly the rather dismal tally of recommendations which had been accepted. My Lords, as we debate today the Liaison Committee's follow-up report, published in June last year, and the government's response, I do have to confess to a rather similar feeling. I wish to thank all the members of the original Select Committee, and I'm absolutely delighted that both Lord Shinquin and Lord Holmes, with all their commitment and expertise in this area, are both speaking today. I would like to thank the Liaison Committee for conducting a follow-up inquiry. I think these follow-up inquiries are an excellent innovation, helping to ensure transparency and hold government to account on their response to Select Committee reports. And finally, I would like to thank the excellent committee staff who assisted both the original Select Committee and the follow-up report. I must particularly thank Lucy Malloy for her outstanding support. The follow-up report contained 19 recommendations covering such critical issues as access to cash, digital inclusion, basic bank accounts, bank branch and ATM closures, the role of the post office, control options, affordable credit, the Help to Save scheme, financial education, government and leadership and the need for proactive regulation, and more besides. I think this demonstrates how multifaceted any serious attempt to tackle financial inclusion needs to be, and why a strategic and coordinated approach amongst all the key players is vital. I will only be able to focus on a small number of these issues today. But before doing so, I wish to reflect on the current state of financial inclusion in the UK. I begin by acknowledging that there have been some positive steps, most particularly the inclusion in the Queen's speech of legislation to safeguard access to cash, albeit 2 years after it was first announced in the 2020 budget. I strongly welcome this as a means of ensuring that the 5.4 million adults in the UK that rely on cash are financially included. 3 years ago, the Access to Cash Review warned that Britain was, I quote, sleepwalking into a cashless society. This has been exacerbated by COVID. And as recent research from the RSA has shown, some 10 million people would struggle to cope in a cashless society, and 48% of the population would find it problematic if there was no cash available. I also recognise and welcome the steps the government is taking, including the recent consultation, to bring buy now, pay later products within the scope of FCA regulation, a good example of the need for more proactive regulation. There was, however, no specific mention of it in the Queen's speech, and I would be grateful if the noble Lord the Minister, when summing up, could say exactly when the buy now, pay later regulation is expected to come into force. With so many banks and ATMs closing, it is absolutely vital that other facilities, such as enhanced post office services or new shared banking services or hubs, based on the existing pilots, come on stream. The recent Levelling Up white paper mentions bank closures in both rural and urban areas, but contain no specific policy measures to address them. Hence my disappointment that our recommendation that the government formally review the powers available to the FCA to mitigate the negative effect of bank branch and free ATM closures was rejected. My Lords, more government action is urgently needed to ensure that the rapid expansion of alternatives for people wishing to use face-to-face services, including community banking and post office services, are available within a reasonable distance, taking account of public transport and accessibility needs. Indeed, I still have the words to the committee of the money advice expert Martin Lewis ringing in my ears. He said, "To answer your question whether it is socially responsible for banks to be closing branches in the middle of this, I never attribute social responsibility to banks. That is simply something the banks need to do. They are there to make money for their shareholders. Surely it is for regulators and politicians to make sure that if we need to keep the bank branches open, they do so. And whilst we must protect access to cash, we also need effective action to support cash users who want to make the move to digital payments. This needs focused and coordinated work on digital inclusion. And I would ask the Minister, when summing up again, to set out what the government is doing in this area. My Lord, since our follow-up report in 2021, which reflected the huge impact of the pandemic had had on people's financial resilience, the soaring costs of living, with prices rising now by 9% a year, have placed yet more pressure on the most financially vulnerable. Indeed, when we made our recommendations last year, the evidence suggested that 27 million adults in the UK, more than half of the adult population, were financially vulnerable. Well, it's clear that this has become more dire for the millions of people across the country, with many now unable to afford basic food and heating. Indeed, research from the Money Advice Trust showed that some people are already having to go without in order to try to get by financially. Specifically, the research showed in the last 3 months that 12% of UK adults, equivalent to 6.2 million people, had gone without heating, electricity or water due to the rising cost of living. 8% had gone without food, and 25% had used credit to pay for food or bills because they had no other way of paying them. Given that some price rises have only just come in, and with a strong likelihood of worse to come, particularly future energy prices rising again in October, there is great concern that more people will spiral into debt, particularly on household bills, or end up going without essentials. And equally worrying is the poverty premium, which means that poor people still pay more for essential goods and services compared to those on higher income. The poverty premium costs the average low-income household £490 a year, meaning that low-income and vulnerable customers still struggle to afford or have to pay extra for or are unable to access appropriate products and services such as utilities, insurance and credit. My Lords, the energy poverty premium is particularly acute. Research commissioned by the Fair by Design found that being on the best energy prepayment meter tariff could still be £131 more expensive than on the best online-only fixed tariff. My Lords, this must end. For households living below or around the poverty line, the elimination of the poverty premium could potentially, it's been estimated, release an extra £4 billion per year into local communities and economies that need it most. So could I ask the Noble Lord the Minister to explain what immediate action the government is taking to help alleviate the poverty premium? And finally, I want to focus on the case set out very clearly in Chapter 3 of the report for more proactive leadership and regulation by government and the FCA. I'm particularly disappointed that our recommendation for a statutory duty for financial inclusion for the FCA was not given more consideration. The Financial Services Bill, announced in the Queen's speech, is a once-in-a-generation opportunity to redesign financial service regulation to ensure that the regulator and the industry better serve the needs of customers. I strongly believe this can only be achieved by giving the FCA a must-have regard duty to financial inclusion to ensure it is both prioritised and enforced within the financial services sector. I recognise there are different views here, different ideological approaches perhaps, but I still have the words of so many of the eminent witnesses to our follow-up inquiry in my ears. With the exception of ministers, they were adamant that clear FCA objectives and a duty of care to customers were required to bridge the gap between the commercial interests of the financial services providers and the societal needs to achieve financial inclusion. And as Natalie Seeney, who chaired the Access to Cash review, told the committee, the fundamental issue is that there are market segments that commercial models will never address. They are never going to be commercially viable to support the most vulnerable and the poorest. And that sometimes glaring gap between social policy and regulatory policy, with both the government and the FCA pointing the finger at the other as being responsible for action, lay at the heart of many of our recommendations. The new consumer duty, currently being consulted on by the FCA, as well as its consumer vulnerability guidance, will not address this, dealing with the experience of customers who currently do have access to financial products and services, rather than the accessibility of those products to those currently totally excluded. The only way to ensure low-income or vulnerable consumers can access essential products and services is to give the FCA a clear remit on financial inclusion. And finally, many of our witnesses lamented the lack of an overall financial inclusion strategy. Whilst the deliberations of the Financial Inclusion Policy Forum clearly continue to be helpful, and the National Financial Wellbeing Strategy produced by the Money and Pension Services is welcome, our expert witnesses felt that they were no substitute for a strategy that could galvanise financial inclusion efforts at a national level, bring together the various strands of work across all sectors and monitor implementation. And I agree. And I still strongly maintain that if such a strategy were presented to Parliament annually as a command document, as we originally recommended, it would allow for proper scrutiny and parliamentary debate. Of course, the government does now produce an annual financial inclusion report, including for the first time forward plans and activities. My Lords, I looked at the most recent report, published on the 21st of December 2021, and saw that the forward plan sector comprised 4 whole paragraphs covering just over one side of paper. My Lords, that is not a strategy. So to conclude, despite my disappointment at the lack of progress in key areas since we reported, I firmly believe this is an issue whose time has come. I look forward to hearing the expert contributions of other noble lords and the government's response.